What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Frank Curzio, founder and CEO of Curzio Research. Frank, it's really good to see you.
Thanks for having me on, Jay. I always love talking to you, buddy.
I think it's been a couple of years, like maybe at my show in San Francisco 2 years ago, since the last time we caught up. So, we haven't had you on this platform since we made this pivot. And for anyone who's not familiar with yourself or with Curzio Research, why don't we start with that? Can you just give us like the elevator pitch? What do you do? What keeps you
the elevator pitch is I've been in the financial newsletter industry all my life. My late dad was in it for 25 years. I've been in it for over 25 years, and I've worked in this industry, some of the largest competitors. And then about 4 or 5 years ago, I decided to start my own place. We have over 20 employees doing very well, and just really exciting times. We've been innovators in terms of my Wall Street Unplugged podcast, which I've been doing for 14 years. We have over 10 million downloads to it. That's every Wednesday. That's absolutely for free, and where we interview some great people. Jay, you're one of them. A lot of industry leaders, and gets lots of stock ideas from that. And also, we launch the first ever security token that gives investors an actual equity stake. Every utility tokens, you don't get an equity stake. It's based on the utility and that function. That's most of them. And we also pay a dividend, which amounts to about 1.7% annually. And we're trading on a foreign exchange. So the first token to ever do that to be a publicly traded company, and really exciting times. You get a piece of Curzio Research and our growth, and things are pretty good right now. So it's a lot of fun. Our job is basically, I worked on Wall Street a lot too, for a lot of my career. And we bring Wall Street to Main Street and tell people, what you need to pay attention to, who's BSing you. And it's resulted in a pretty big following that continues to grow. And, I'm humbled by that. Yeah,
that's awesome. And I just want to note that, Frank, you were talking about your security token back in like 2019. This is way before this current crypto rush, just for context, because there's a lot of rushes in right now. But you were putting this plan together a couple of years back. I remember you pitching on it, like I said, in San Francisco 2 or 3 years ago. So congrats. And I want to jump into that and what you've done there. Prior to that, just to pull on a thread, what you do is help people determine what they should pay attention to. So right now, like, noise is at an all-time high, whether you're looking at macro, small cap, whatever. Frank, what do you pay attention to right now? Where is the opportunity for investors right now?
Yeah, for me, I look for disconnects. Even COVID, there's a big disconnect, and we're in Florida, and I think people, other people outside of Florida push an agenda that we're responsible. We still wear masks when we go indoors, but we looked at the statistics. We kept the economy open, and people have done fantastic down here, and our cases are just as low as everybody else. So I'm a numbers guy when it comes to things like Donald Trump and the tariffs with China, right, and the whole trade war. And for a year and a half, 2 years, you could Google it, and there's probably hundreds of millions of stories on it. So don't worry about it. There's no trade war. There'll be a trade war because China needs us, right? They're producing most of the goods, but we could buy them from any place. It'll be a little more expensive if we go someplace else. But the fact that, we have control over that, you didn't have anything to worry about. And the market sank several times, even a 20% pullback at one time. And we used that as an opportunity to buy. So when you fast forward to today, I think COVID is still an issue. People are still worried about it, regardless of the facts. We know who this targets. Again, all the numbers are available. It's kind of like a bad case of the flu if you look at the numbers. I don't have an agenda. It's not about politics. It's about people and saving lives, right? If I could do that with our platform with over 120,000 downloads now a month for Wall Street Unplugged, we have doctors listening, great contacts. And early on, we were interviewing people who were on lockdown in Italy and China. I knew it was going to spread here, knew how bad it was really early. We were able to get out of the markets for our guys and then get back in a little bit late in May. But that was determined, and you're asking for ideas, is for me, getting back into the market, I never thought, Jay, in a million years that we'd be throwing out the trillions number like it's nothing. And the amount of money that's been filtered into this market, you have to understand it's $10.5 trillion right now. That's 3 times higher than any other country, right? 3 times higher. The next highest is Japan. That's $10.5 trillion. That's 50% of GDP. Money going directly, given to consumers at the exact same time. And now you have low interest rates and now COVID restrictions. They've been relaxed in certain states like Texas and my state in Florida. But you're seeing it more relaxed, and these people are dying to get out. They're dying to spend money, and it's providing a lot of opportunity. We've seen a lot of these companies get ahead of themselves. Maybe some of the casinos and the cruise ships. I mean, there's not a cruise in the water yet, and these things are trading at higher valuations than they were pre-COVID. It's a little scary, but there's a lot of hotel names. You're going to see flights being booked out. It's going to be difficult to book flights going forward. I mean, everyone has been given this money, and the fact that another $2.3 trillion is on the table for infrastructure is pretty insane. But that provides underlying foundation where, equities are still a great investment. Interest rates are going to stay low. You're seeing them go a little bit higher in the 10-year. They pull back recently, but if they go a lot higher, you're going to see the government implement yield curve control, which basically caps out long-term rates. And Japan has done that. If they've done that in World War II, the last time they did in the U.S., they have to. We just have too much debt. So interest rates are going to stay low. It's going to promote risk, and it's going to give you an opportunity to buy stocks. You're going to see a lot of volatility like we're seeing today, but overall, you're going to see this trend's not over. I mean, it's not even close to being over, and just the amount of money coming into the market provides a lot of good opportunities, I think, for investors here.
Yeah. Okay. I like that. I want to pull in a few threads there. Your comment about travel and whatnot. Yeah. I think in the United States, business travel specifically, not recreational, but business travel is back to like 90% of what it was prior to 2020. Right. And recreational is probably not far behind. We're talking about domestic travel. Yeah. So you're looking at, I guess they call it a vaccine-led recovery. And for the record, it's interesting that you say, people may be looking at Florida as being irresponsible. I look at it with jealousy. I'm like, why? This is smart. Like, you're getting back to business, you're being careful, but you're kind of proving the narrative wrong, from my perspective anyways. And I love seeing it. Okay, now you mentioned equities are still a good trade. Now, is that on the back of a vaccine-led recovery and boom, this pent-up cash hitting the economy, or talk to me about that a little bit?
Yeah, a lot of this cash is yet to hit the economy. We're looking at savings rates that are at around 18%. Put it in perspective, they're usually around 5-6%. I think it's the highest on record since some of these firms have been keeping coverage of it. Bank of America is one of them, and Evercore is another great research firm, sell-side firm. And what do you see right now? You see stocks continue to go higher. You see people talk about them, right? So that fear of missing out is very, very powerful, especially when you look at cryptos and you're seeing, where Bitcoin is, with 60,000, came off a little bit, but near all-time highs where, you're sitting and putting this money in savings accounts and you're just leaving it there and you're not generating anything. And then, hey, you know what, let's buy real estate. Well, real estate is absolutely booming here, unbelievably booming here. And it's resulting in much higher prices around lumber and different things and copper and stuff like that. But overall, when I look at the amount of money that is coming into this market, it's just incredible. And like I said earlier, it is providing lots and lots of opportunities. And that fear of missing out and that cash on the sidelines. I mean, the stat is in the last 5 months, we've seen more money come into this market in the past 12 years. Under normal circumstances, I would say that's a top. But people have been calling tops in this market for the last 6-7 years, and they've been wrong because the government is fully involved. And you could hate that fact. You could argue against it. You could, again, I'm not supporting it. For me, it's reactionary. If the government's going to be there with every 20% correction, ready to hand people money, it's going to be a buy on every single pullback. And we're still in that market with our government, with the printing press that can be turned on 24 hours a day. Again, I hate that fact. But my job is to tell my clients how to make money. And the fact that they just continue to give more and more money out, 2.3 trillion, another already 50% of GDP, 10.5 trillion. Another 2.3, 2 trillion, call it what it is, which is coming. And it's going to fuel a lot of sectors, a lot of different things. And, ESG companies have done very, very well, whether you agree with that trend or not. But hey, you're looking at a mandate by so many of these companies and you're seeing them come out. And JP Morgan was, I think, something like $10 billion they're going to spend over the next few years, just ESG projects, focusing on the environment. Again, there's a lot of initiatives being pushed out there, a lot of money being made, and, they're flooding the markets with capital right now. So that can't be ignored.
Interesting. Now, we initially connected at my commodity investment conferences, junior mining specifically. Mm-hmm. So talk to me about your thoughts, the gold market, silver market, commodities in general. Are you deploying capital or what do you see?
Yes. I mean, I've been a long-term holder of uranium, like everyone else. I thought prices would come up a lot quicker, and prices have still been depressed. But if you notice, the stocks have been doing very well. Yeah. These are things that I've gotten to private placement deals where I had 5-year warrants, and I just sat on them. I just say, you know what, I'm in these things long-term, and now we're seeing a lot of that come around. But uranium is pretty hot right now, but you're going to need prices to come up eventually. And everybody knows the story and supply disruption, and electricity companies need to purchase, and they haven't purchased enough uranium going forward. We see more plants coming out. We know the story, but prices have to go higher. It's it's not going to be good for the industry if they don't. It's almost like buying oil companies when oil is at 20 and 98% of them can't produce or make money in oil without hedges at that price. So hopefully we see an uptick in prices. We keep getting a little head fakes over 30. It's come back below that. As for gold, I'm a big bull right now. I mean, I have a lot of investments in gold. For some reason, Jay, and you notice better than anybody because you talk to so many people in both industries, I don't know why people think it has to be gold or Bitcoin, and people debate and they hate each other on it. Both. Our company is based on, on crypto to the point where you could buy an equity stake in our get an equity stake in our company through our it's called Curzio Equity Owners Tokens. It's symbol CEO, trades on the merge exchange, which is a foreign exchange. And when it comes to gold, look, I'm going to say something that's pretty crazy of someone who covers all sectors. I don't think you'll find in any other industry the large cap names, right, the industry leaders growing faster than the major gold companies and are trading at cheap valuations. I mean, I challenge anyone listening to this to find it. You won't find it. You won't. Trust me, I tried to find it, and it's ridiculous. A lot of these companies are trading even, we're trading at 22 times forward earnings on the S&P 500 on average, which, it's usually about 17 times a 5-year average. You look at gold companies trading at 10, 12 times forward earnings, generating tons of cash flow. These guys could produce, we're 17 and change. If it goes to 18, 20, comes back to 1650, whatever, these guys are producing for 900 all in costs, and they're going to be buying back their stock. Those are fantastic investments. It's tough to say that in a world where there's instant gratification, though, Jay, right? I mean, you're buying Dogecoin that's up 400% a freaking week. But again, it's going to come back to reality. And when it does, those are some of the stocks I like to own, and also junior miners that have very, very good projects. I mean, it's most of those things don't survive, as you know. I mean, we have a lot of those companies and they present your conference, but one out of every 3,000 projects becomes a producing mine. Think about that next time you go to a conference. Doesn't mean they can't go higher based on results, but that end result most of the time doesn't happen. So for me, I'm focusing on good projects, good people. And a lot of these projects, too, along with the majors, have a huge exposure to copper, which is up tremendously. I mean, you produce hundreds of millions of pounds of copper a year, which, is up, $1 and change in the past 7 months or so. That's just more and more cash flow they're going to use to buy their stocks and purchase a lot of these junior miners, some of them that are in great position right now. Yeah,
I love that. Okay. I'd like 3 things in there I want to jump into. The first is the uranium market. I'm seeing a shift in sentiment, Frank, and it's coming from an understanding of power generation, meaning that we're kind of getting over this fear a little bit, which is important, right? I think that the biggest barrier to expanded nuclear power hasn't been technology, hasn't been capital, it's been sentiment, right? We point to Fukushima, 3 Mile Island, Chernobyl, obviously, which truthfully, it's only 3 incidents. I don't want to downplay them, but it's only 3 incidents over 42 years compared, there's a lot of fear mongering there, but that's shifting. However, the supply and demand balance we can all look at now and say this makes a lot of sense as an investment. What do you have to say about the narrative that, some investors point to Kazatomprom and say, look, all these guys have to do, though, controlling 46% of uranium supply, all they have to do is flex a little bit. They control the market, they control the price. And that's why the uranium price hasn't come up, because you got one supplier who dominates the market and they can flex whenever they want to. What do you think?
Even Cameco. You have Cameco, too, that took took one of MacArthur offline, right? So when I'm looking at those fundamentals and someone that looks at all the numbers, I'm not a perma-bull in uranium, right? I mean, people overlook that. For me, that's a concern. I mean, it's almost like OPEC, right? Turn the faucet on, turn it off to control prices. It's not that difficult to get these mines back in production. Maybe it takes a little time, but the fact that it's there and it's ready, it's not like the chip shortage that we're seeing where everyone has to make more chips from scratch. It's a very big deal to really support things. I went to a local Best Buy, and the shelves, for the first time that I've been going there 15 years, I love Best Buy and big electronics fan, there was shelves completely empty. It was like they just opened the store. They had no inventory. So, they do have inventory. It's just a matter of, turn it back on. But there is enormous demand to cover that. It's just, when will electricity companies really start putting their foot down and start locking in those prices? They've been lucky for 10, 12, 13 years since Fukushima. But they are going to purchase these. And when they do, they're going to have to do it at much higher prices. And that's where I think you see prices come in there. So even though with the fact that those, that they could easily turn the faucet back on in terms of production and that has been shut down, there's still enough, much demand out there, I think, to support that. And hopefully, again, we've been waiting this for a long time. I'm just surprised prices have not at least been over $45,000 a pound.
Yeah. Okay. I'm with you. Okay. Over to the gold market. One thing, I mean, you're supporting equity is still a good trade. You're supporting a vaccine-led recovery. Is there a correlation between that and a gold price? And if so, what is it? What do you see there?
I don't know about the vaccine. I don't know if I would put those two markets together. What I do see is the destruction of the dollar. It's not going to happen in our lifetimes or our kids' lifetimes. So anyone tells you that's absolutely crazy. And if it does happen, believe me, don't worry about making money because the world's going to end, right? The whole world, it revolves around the dollar. If you don't think so, send me $1. I'll take them all from you. So, but they are destructing the purchasing power of the dollar, and that can't be ignored. There's a reason why Bitcoin is going up so much. The big challenge for gold here is the younger generation. How do you make it exciting? Because gold is not exciting. It's not exciting business on any level, right? Even from the production standpoint, it's not exciting. And the younger generation are seeing how much money is being thrown into this market, and they're reading the right things, and they're saying, you know what, I'd rather go into Bitcoin than gold. But it doesn't mean you can't own both. And I just think, the fundamentals behind gold, where, just what we talk about, Jay, 2013, 14, and we saw these majors almost go out of business. They were so leveraged. I mean, It sounds crazy today, but these guys are leveraged so much. They were giving away royalties, not for free, but that's why so many royalty companies doing great, because they were able to take pieces of this because they needed to be financed themselves, just cutting staff and cutting everything. And more important, just underdevelopment, not drilling any projects anywhere. And that's resulting in these guys need to find gold. They need to produce gold. There hasn't really been tons of major projects out there that have been, that have been found producing. So again, the majors are in perfect position. The juniors you have to worry a little bit more about. Just understand the risk you're taking with juniors. They don't generate any revenue. They have to produce good results and show you good drilling results. If they don't, then the stock is basically worthless. So if you have money to play with, just be careful. Make sure you're dealing with a management team that's experienced, that has brought a mind from early stage to production, because they know exactly how to cut costs during bad times. And I see a lot of companies go under and not do a good job, and people get destroyed on some of those names. So I am favorable on gold. I think the fundamentals are there. I think if you're looking at the macro review, I don't know if I would look at the macro review, because I was told that it's a great play, a great hedge against inflation, and it's not. It hasn't been, right? We're seeing inflation every place outside of the CPI, what the government looks at. But lumber, copper, corn, you name it, everything is high. Every bill that you're paying right now is higher. So, and we were told that the negative real interest rate is bullish. Well, it's been negative real interest rates forever, and that hasn't really been bullish for gold. So, there's a lot of things. Is it a store of value? I mean, there's so many different arguments that I've heard over the years. And, right now to where we are, I like the fundamentals of gold. I think that's the way I would play it, based on fundamentals, and also just the destruction of the dollar and a place to put your money. But again, a lot of that money that goes into, if you believe in gold just for that reason, some of that money is pushing into Bitcoin, and, it's very noticeable.
Yeah, well, to your point about there's nothing exciting about the gold market, depending on your perspective, I agree with you, except that, the volatility of the juniors is incredibly exciting. And when I think of the generation, above me, right, the Rick Rules, the Doug Casey's, Jim Dines, all these individuals, when I talk to them about what drew you to the junior mining sector, across the board, the answer is always, it's the one market where you can actually find, the 10 bagger, the 20 bagger, the 50 bagger returns if you're hyper careful and diligent. And that volatility works both ways, but it's very exciting. However, if all you're looking for is volatility in those returns, you can find those now in the crypto market, right? And so
that's the thing. It's not that it's not exciting from a point of maybe, I don't want to say that again, I know tons of people are speaking at conferences in the mining industry that it's not fun. You're in it for those booms, because those cycles could be life changing. You could have 5x, 10x, 15x, but we have a crypto intelligence newsletter. So it's called Crypto Intelligence. We have 3 names in there up 30x. And several of those names are up 20x. I mean, again, it's a screaming bull market, but when you're seeing those gains that quickly, they're going to have to come down. We're going to see a nice, just an ease in crypto. It's a little crazy right now. Again, Dogecoin is a fake. RPM Ripple is XRP is a fraud, I think. So there's no utility. There's no utility function for that token. But yet, these guys just continue to say you can't find any financials, nothing on these things. But when it does ease, and it will calm down, then I think you'll see a little more money pour into gold. But right now, when you could buy Dogecoin that's based on absolutely nothing and make 400% a week, it's hard to compete, right, with that. I mean, where else would you want to put your money, right? How do you tell a young investor, hey, buy something, buy gold and hold it when you're seeing these massive gains? It's not an easy sales pitch.
Yeah, I'm with you. Okay, now Doge, for example, only because I've had so many subscribers email or comment asking questions about this.
To the point, yeah.
Frank, if you were to have to make a bet now, it's either a completely illogical speculation or it's something that we don't quite understand yet. Which one is it?
Dogecoin?
Yeah.
I think that it could triple from here. Again, it depends the hype around it. I know that it's worthless. If you don't believe me, try to find one financial on that company. I challenge you. Go to their website. Yeah. Tell me what that company does. Tell me, find a presentation on it. You're not going to find anything. Believe me, I looked. All right, I've researched thousands of these. In fact, if you look at right now, and this was before crypto came down the past couple of days, there's now 100 cryptos that are trading that have a market cap of more than $1 billion. 85% of those, you won't find any information at all. And remember, you're not getting an equity stake in these guys. Like, people think they're getting equity stake. So if Microsoft comes in and buys Doge at a $50 billion valuation, hypothetically, that never happened, you get nothing. As an owner, you don't own equity stake. The only thing you own is the utility, the function of that. It's like going to Dave & Buster's and you get your card and you could swipe in different Dave & Buster's. If all Dave & Buster's disappear, that card's worthless, right? It's only as good as that utility. And that's what you get. It's why with our token, it's an actual equity stake. And I think that market is going to boom. And, the Coinbase is definitely going to accelerate. But, getting back to Dogecoin, it could continue to go a lot higher. I mean, who thought it would go this high, right? I mean, which is pretty crazy. But, again, I've learned my lesson betting against things that are hyped up because they usually go a lot further than anyone believes. So I wouldn't tell you if you own it to sell it, but if it, you lose 90%, don't be surprised.
Yeah. Okay. Let's jump into your token. Talk to me about what you've done and what's available to investors.
Yeah, so you can buy our token on Merge Exchange. It's very exciting times because we were early adopters and, we dealt with the ups and downs. Like being first to the market, everyone's like, yeah, that's great. AOL was first to the market, right? So was Research in Motion. But you run into a lot of bumps in the road because the infrastructure is just being built. And then you had COVID. But for us, the most important point is, why do we do this? Well, it requires less regulation, which is less money out of our pockets, right? So, and then we can go directly to investors without having to use investment banks. So we were able to raise $4 million off our list, and we were able to sell this token, and now they have an equity stake. So we are getting our financials audited, which is awesome. And I chose to do that because our goal is to trade on Coinbase, which will have to trade security tokens if they want to grow. It's an exchange. You need more companies on there, and the rest of the companies are not securities out there. So it's going to be hard to get more. They either have to get more users or, more important, they have to get more tokens. And that's why they're going to go into security tokens. And we want to be positioned where we have audited financials. It's going to provide more transparency for everyone. We are a growing company, becoming a media company now, not just a financial newsletter publisher. And, you can find all that information out on CurzioResearch.com. And again, a token is Curzio Equity Owners, a symbol CEO. But anyone looking to raise money for a small business, if you have 2 restaurants that are doing great and you want to scale it, if you go to investment banks, they're probably like, you're not going to be big enough. You're generating a couple million in sales. This is the way to do it on your own. Where now you can get right in front of investors. You can raise this money. The regulatory structure where you don't have to pay for orders every single quarter, which is an absolute fortune. The game is rigged. So, the best companies are going to go public, and those insiders are going to make the most money by the time they come out. But our company is in a very early stage for growth. Maybe I completely mess it up and it doesn't work, but if it works and I turn this into $1 billion company, you're in at the absolute ground floor. You cannot do that anymore with an IPO. These things come out multi-billion dollar valuations. A lot of the growth has already taken place. Yeah. That's a big advantage here. It's going to happen. It checks off every single box, Jay, just like Uber did. I mean, when you look at Uber, it's cheaper. They're cleaner. It's much easier. It's safer. It just checks off every box to the point where I got to use you. This checks off every single box, where so much so you're seeing investment banks now really going all in on crypto, and they're partnering with a lot of different players in this industry because they were late to the party. And this is going to get bigger and bigger, especially now that Coinbase is out and more regulation. The US is finally going to regulate this market. Again, crypto people hate regulation, but you need to know your money's safe. You need to know your money's safe. You need to know that you could, transfer money in and out of your account, not a problem. You need that. You need to pay taxes if you make money, IRS. You need those checks. And now that you're going to have them, the U.S. is totally engulfed in this after the Coinbase IPO. It's going to be an exciting time, I think, for crypto, especially security tokens.
So you think, okay, so we're at the beginning stages of some kind of a bull market in security tokens right now for small businesses?
Yes, that's the next thing. And the way you have to look at crypto is, I don't know if Bitcoin's going to $1 million, right? And people will go crazy with these forecasts and whatever. The people I try to avoid are diehards, right, on each side, because those guys, there's no way you're going to convince them otherwise. Just like a gold bug who said buy gold since the 70s, same thing, same thesis, same everything.
Completely agree.
When I look at crypto, I look at it as the internet, where there's going to be different facets inside of the bigger trend and maybe it's not Bitcoin, maybe it's not Ethereum, maybe it's not Litecoin, but you look what happened in the DeFi space. We saw a market that came up, crash in 2018. Right? It's Coinbase was going to IPO, and then they said they can't. Right, so basically they didn't. Through 2019, now the market's coming back. But what happened? Now we saw a transition into DeFi, decentralized finance, which a lot of these companies are up tremendously. That now we're seeing what NFTs, non-fungible tokens. Everybody's getting into them. You're seeing how much the blockchain can operate, and the fact that you look at the bigger picture here with our media companies. They control everything. They have all of our data. They know I'm doing this interview. They know when you're going to publish it. They know everything about you because we all have patterns, right? They have AI on top of, big data analytics. And how do you avoid all that? Is through the blockchain. So when you're looking at the whole area of blockchain, decentralized finance, you're going to continue to see different areas within crypto excel. And I don't know if Bitcoin's going to be the absolute winner right now. Of course it is. And it looks like it's going to be that way. And maybe it goes higher. But inside of this trend, it's going to be like the internet, where social media, Jay, is just 10, 12 years old. You look at the internet from the 90s, it was like, how do we they just kept disrupting more and more. It's like, oh, we need a website. That was the beginning. We need a website to go online. And then it was, now all the travel agencies went out of business, right? Because of Expedia and Priceline and Booking. So it's constantly disruptive. Even the internet is still disruptive today because now we have 5G on top of everything. Now we have quantum computing. It's constantly evolving, right? Streaming is not that old. So you're going to see the same thing. It's going to be ups and downs. But from someone that's been in this industry, we're credible in the contacts we have in this industry. It's very, very exciting. And, we're a trusted name. And, that for our crypto intelligence news, that results in us getting into a lot of names very, very early because, we have the right contacts. It's who you know, and we have credibility in this space because we're the only ones that did a security token.
Okay, I have to ask you some dumb questions because I'm a dummy in this industry. So where are you trading?
So it's the Merge Exchange, MERJ, and that is located in Seychelles. They are an actual exchange. So we came out of $5 and tokens around $7. And right now our job is to get more liquidity for that token. So it is a foreign exchange. And once we get
my first question is is it liquid? Is there a market?
There is a market, but it's not that liquid. And here's what I do at my company, which is, I didn't set up as a money grab. And it was easy to set this up as a money grab. So a money grab would be, what we did is we sold a certain amount of tokens just to those investors. Those 4 million tokens are the only tokens outstanding. So the insiders, there's 4 of us, and I own, most of the company. I'm the founder, and we own a majority stake in the company. We don't own tokens, so I can't dump these things. It's still in my best benefit, of course, for the valuation to go higher, right? Because I'm an equity owner. But the people who own the tokens get a dividend and an equity stake. Why do I do it this way? Because I'm looking at the bigger picture. And how do you get trading on some of the biggest exchanges out there? Now, Coinbase, how do we do that? One, we have transparency. We're going to have our financials audited. I think we're going to be the only token in the world to have our financials audited and also pay a dividend. I do pay a dividend, which is higher than the S&P 500 right now. And because of that, there's not a lot of liquidity, but we are going to provide liquidity going forward and either, split the token, but that's going to be required, I think, to go on some of these exchanges because they need trading. Again, we're early to the party. We structured it perfectly for investors. Our investors love us. They just don't want to sell it because we're paying them a dividend. So it's good and bad because we want more investors and new investors to come in. So that results in a wider spread. But that is changing as more and more people come online. And that's the next step, right? Once you have liquidity, that's why you're looking at Goldman and JP Morgan, Ray Dalio. Why do you think they're changing their mind on Bitcoin? It's not because they had some, oh my God, I was wrong on this. No, it's because it's a $2 trillion market. They can't ignore it anymore. The volatility is there and they can move their clients in and out for hundreds of millions of dollars. So it has to be a liquid market. And that's the next step that's coming in security tokens. And a lot of great news has happened. See a lot of alternative trading platforms like T0 has been launched. Securitized, another one's launching. There's like 3 or 4 coming out. And we happen to trade on an exchange that's fully regulated. And, so really exciting times for us.
So you issued 4 million tokens, correct? Mm-hmm. You raised $4 million, correct? So
we issued 1 million tokens and raised $4 million. So anyone that came in got a discount around $1 to 50 cents. So it was a 10% to 20% discount of people on our list. We offered that too. So some of them came in. So that's pretty much their base price. So 4 million, around 1 million tokens are outstanding.
Okay, now what's the path? Speculate with me. I know this is conceptual, but what's the path for Curzio Research to become the $1 billion company? You issue more tokens, raise some more money, go after some acquisitions. What's some conceptual ideas?
Yeah, great question. So the reason why I did this is when you look at our competitors in the industry, which, Agora affiliates, and, we all work for them, our management team, they're all great companies. We're generating about 2.8 million revenue last year, right? We're going to generate more than that this year, most likely, as we're on pace anyway. Yeah. But these guys generate anywhere from $100 to $300 million, even $400 million. I mean, one of them just went public with a bunch of divisions with a $3 billion valuation.
People don't realize how big the financial publishing industry and businesses can be.
We're a little dot, which shows how much growth we have in the financial publishing. But our goal isn't just to be, capture some of that market. I mean, 1%, and we're looking at sales, skyrocketing by 17x, and we capture 1% of this market, and we're starting to capture some of the market. People are coming over. They know we have a no BS platform, but what do? Well, one thing is we're focusing on becoming a media company. We want to focus on video. With all of our newsletters in video format, you see me actually making these recommendations. They're 30-minute videos. I share my screen with them, and that has been unbelievable a response, because at the end of the day, you really don't know who's writing these newsletters. You're just getting emails. So they see me in the trenches, traveling, doing tons of video. But adding names is the lifeblood of the industry. And the fact that we have a real big edge here in crypto helps us out. And, just for example, you're looking at some of these major platforms. If it's BlockFi, who I had on our podcast, Zach Prince, you add one of the top heads of Kraken, right, which is one of the largest exchanges in the world, crypto exchanges in the world outside of Coinbase and Binance. And I mean, these guys have tens of millions, if not hundreds of millions of users on their site, and they're looking for more information. They're looking for ideas. So our goal, how do we turn this into a big company? We become more of a media company where all the name generation coming in, we want to, how do we get that to transfer over into revenue? We've done a great job so far. So, our formula has been working. We've been very upfront. Even if we have losers, like everybody has been in this industry for my entire life. And I put myself in their shoes. So we're going to have losers sometimes. If they go down, you want to know what to do with them. Just say, hey, you know what? We were wrong on this, made a mistake, try to make it up for you. And I can't tell you, it's the easiest thing to do, and very, very few people do it. I don't know why. But I mean, you have to have a good track record. If I'm not right more than I'm wrong, I'll do something else for a living. But the track records on ours, I hold my analysts accountable as well. So our job is to make you money. That's it. We don't get paid by anybody. We're independent. Nobody. I mean, I've been offered money, again, not just people saying, hey, do we pay you for that? No. So the only way I'm recommending your stuff, and I believe it's going higher, and when my subscribers get it, if it doesn't go higher, they're going to cancel their service. So my motivation is only to make you money. And that's been our goal from the start with Curzio Research, and it's resulted in a lot of loyalty, a lot of customers coming in. Again, it's not too many people that can raise $4 million, and we raised that in about 2 weeks in terms of the financing. Because, people want to be a part of it, and it's really exciting. And it also humbles me of, the Wall Street Unplugged podcast and the guests that we're getting now, huge, quality billionaires and great times. But, it's resulting in a lot of more people coming to our platform. And that's also on a Curzio Research YouTube page, which we do all of our podcasts in video format now, which is cool.
You make an interesting comment about the transparency of videos, saying, it's me because you can see it's me by a video. And it's significant because, as you know, and as I know, and I won't call anybody out, but I know a lot of the biggest financial newsletter writers in the business, and they don't write their own letters. Not all the time. That's not a blanket statement, but often you can find many examples of the biggest names in the newsletter business. And there's a ghostwriter, research analyst team doing the work. And essentially it's like a licensing deal almost, right? You license the headshot and the name of an individual. Yeah, interesting. Okay, look.
And Jay, just to your point, it's again, there's a lot of great newsletter writers out there,
100%.
And and awesome. But if you want more clarity, do your research. So if you go to see these guys and they whatever guys, women, and they're doing their presentations afterwards, they take questions, ask them about a couple of stocks in a portfolio. You'd be surprised how many don't even know what's in their portfolio. So do your own research, and you can find out. It's not you're not calling out anybody. I'm not calling out anybody. But for me, I only know our business, and I know that they like to see me anybody out there. They love to, it's the educational aspect where I'm telling them why I'm buying this stock. And there's hundreds of different variables. It's never, 1 + 1 = 2. Okay, buy it. No, if it was that easy, everyone would have the same formula. It's different. And just going over exactly how I find these names and what I'm looking at, it's pretty cool. And it's resulting in, a lot of loyalty, a lot of people staying on our list and becoming not just a subscriber to one product, but several, 3, 4, 5 different paid products, which is really cool.
Yeah. Okay. Hey, look, I should wrap it up because I told you I'd keep it for 15 minutes and I think we've gone for over 30, but I just had a ton of questions about what you're up to. Look, it's been great reconnecting. Good to see you again. Yeah. So I recommend the Wall Street Unplugged podcast, one of the top downloaded business podcasts on Apple iTunes. You on Spotify as well? You are, right?
Yeah, so we're on. Lisbon is how we download it. We're also on our. You could go and visit our website. iTunes is probably the easiest place to go to. I mean, that's probably the easiest place. So iTunes, we've been on there for a very, very long time. I mean, I used to do Podcast Jay real quick back at thestreet.com, and I did it every single day. And our podcasts are an hour and a half format. So you're getting a lot of information on it. It's really, really cool. And it's absolutely for free. And you could judge. And if you don't like it, you can write a comment. If you like it, you can write a comment. But, we're pretty open and we love providing that free platform for new people to see who we're all about.
And anybody who's interested in exploring the token, they can find that at CurzioResearch.com?
Yes, CurzioResearch.com. Absolutely. And I appreciate that. Thanks, man.
100%. Yeah, it's good to see you. All right. Thanks again for coming on, Frank.
All right. Thank you for having me, man.